Hi, my name is Melissa Purnell, and today we're going to be talking about the option of rehab financing. Is a rehab loan right for you? If you have been looking for an existing home to purchase, you might have noticed that quite often there are deferred maintenance issues or updates or repairs that you'd like to do to the property. And if you don't have money to pay for these updates or repairs after you purchase the house, you might consider purchasing it with an FHA 203K or conventional home style loan, which allow you to roll the cost of repairs into your mortgage. Let me show you what this might look like. Say you find a house you want to buy for $150,000. You offer the seller $150,000 and that's what they agree to sell it to you for. But because the bank is going to be financing $20,000 worth of updates and repairs, your mortgage is based upon a $170,000 purchase price. Rehab loans are what I call higher and longer loans, and let me explain to you what I mean by this. Higher for three reasons. One, higher because you are required to have a higher credit score in order to qualify for a rehab loan. Higher two, because there are additional fees associated with closing a rehab loan, your closing costs are going to be higher. And higher three, because interest rates for rehab loans tend to be higher, somewhere between a half up to a full percentage point sometimes. Longer because it's a more complicated loan to pull together. There's a lot more tasks that need to be completed and more people involved. So it tends to take longer to close a rehab loan, whereas a normal loan would take 30 to 45 days. A rehab loan is going to take 60 to 90 days or even longer. And why is this? Because your contractor is involved. He needs to be approved by the bank because he's going to be paid by the bank. All his work is going to be approved by the bank, and he needs to submit an itemized list of all the repairs that are going to be done along with an estimate. And sometimes that gets a little complicated and you have to go back and forth a little bit with the bank around that process. Longer too because the repairs take anywhere from 3 to 6 months after settlement. In fact, they have to be completed within a certain time frame that the bank outlines. So it's going to take longer for you to be able to settle down and enjoy your house in peace without the hustle and mess of repairs being done. How is it possible that a bank will lend me more money than what I agree to pay for the property? Aren't mortgages based upon appraised value? Well, yes, they are. What an appraiser does in a rehab situation is they bring a list of the repairs and updates that you're going to be making to the property, and they appraise the property based upon its after repair value. Do you think a rehab loan is right up your alley? Speak with your lender for more information and to see if you qualify. My name is Melissa Purnell. Thanks for joining me today, and we'll be talking again soon. Bye.